Hello and welcome to Nonprofit Times TV. I'm Randall Mauricio.
And I'm Tamara Falansky. Here's what's coming up on today's webcast.
The recent election means challenges for nonprofits.
ACORN files for bankruptcy liquidation.
And successfully establishing corporate partnerships.
The new Republican majority in the U.S. House of Representatives for the next 2 years, following their sweeping victories during the recent midterm elections, could be bad news for many nonprofits. The axe is out and program spending by the federal government is on the chopping block. It's not going to be a pretty picture, according to Gary Bass, founder and executive director of Washington, D.C.-based OMB Watch. Bass says a showdown between Tea Party activists and the Republican establishment early next year, especially regarding the federal debt ceiling, could cause gridlock that will stop the government from paying its bills for services it's contracted the sector to handle. Diana Aviv, president and CEO of Independent Sector, says the big questions are how Congress will deal with health care reform and deficits. The House Majority Leader, Congressman Eric Cantor, Republican from Virginia, says he's aiming to cut $100 billion in federal funding. Aviv says, "We assume it's not from entitlement programs, but from non-defense discretionary programs." One change charities might like is that Senator Orrin Hatch, Republican of Utah, is expected to serve as chairman of the Senate Finance Committee. He is a moderate Republican who has a feel for nonprofits and helped to author the landmark Serve America Act with the now late Senator Ted Kennedy.
Less than a year after an independent report cleared ACORN of any wrongdoing in highly publicized hidden camera videos, the 40-year-old organization filed for Chapter 7 bankruptcy liquidation. The social justice nonprofit came under fire during the summer of 2009 after edited videos were released by conservative activists posing as a pimp and prostitute, claiming ACORN staff and/or volunteers offered, among other things, to help in dodging taxes and securing grants. ACORN affiliates started closing earlier this year. ACORN CEO Bertha Lewis says the ongoing political onslaught caused irreparable harm. This effort was a clear attempt to cast a shadow over the historic 2008 presidential election and set up a far-right counter-offensive. Through those attacks, we retooled and reorganized. Then again came the right-wing media blitz.
Bequest giving plummeted to $16 billion in the United States last year, down from $28 billion in 2008. According to the Internal Revenue Service, roughly $28.3 million in deductions were filed in 2008, with more than 3/4 of them coming from estates valued at $20 million or more, compared with $16 million last year when the estate exemption was higher. Frank Minton, a Seattle-based senior advisor to PG Calc, cites 3 likely factors for the drop: the economy, the estate tax rate and exemption level, and simply chance. He says when there is an erosion of wealth due to stock market and real estate value declines, bequests, whether charitable or non-charitable, would be affected. The number of estate tax returns has been falling since provisions of the 2001 law were phased in. Minton also says household net worth peaked in 2007 and then began declining, affecting the value of estates and distributions.
Most companies offer paid time off for volunteer activities. However, a new survey indicates most of those efforts are lacking in measurement and accountability. The 2010 Deloitte Volunteer Impact Research Series found the message about the potential of volunteerism has taken hold, but there is still work to be done as a gap exists between high expectations and the processes in place to achieve them. While nearly 70% of firms offer time off, almost half as many say they always discuss how the company can help nonprofits collect data prior to embarking on a project or work with organizations to customize metrics. Only 47% of respondents say they require nonprofits to report back on the results of the company's volunteers. The top issues volunteer time is intended to impact were education, community and economic development, and poverty.
We'll be back in 20 seconds with our feature story.
This feature story is brought to you by Fine Line Communications, your multi-channel inbound fundraising contact center.
Corporate donors are becoming more vital to the financial health of charities. They can also be a huge liability if the deals are done wrong. We caught up with Adam Cairns, Corporate and Foundation Relations Director for Children's Specialized Hospital in Mountainside, New Jersey, after the recent conference of the New Jersey chapter of the Association of Fundraising Professionals. The hospital's hugely successful corporate partnership program was highlighted at that conference. So Adam, on the face of it, a hospital partnering with an energy provider, in your case, PSE&G, is unusual. So how did it come about?
Well, for over 20 years, PSE&G had been a loyal supporter of the hospital. The relationship grew over those years. There was a small capital contribution during that point, and we knew of PSE&G's overwhelming generosity. When we finally had a project that fit their generosity, being the creation of our new inpatient center, we knew we had a project that they could fully lend their support to. We developed some internal champions, and from there, the gift went from a smaller ask to snowballing into a much larger ask with their support into the final lead gift that named our hospital.
How far along in the process is an ask price point developed, and how do you establish that business partner X can afford a specific amount?
I think it's important for any nonprofit to do their homework, to really do the prospect research, to be able to identify and quantify a gift from the capacity of the organization they're prospecting. In the case of PSE&G, it took a lot of work on our side to cultivate the relationship to find out actually what the capacity of their giving was. It surprised us at some points, but at the same time, we knew we had the cause for them to support at a large level.
To watch the full interview with Adam, click on the banner below this video player, and it'll take you to our video library.
Thanks for joining us today. Let us know your thoughts on this webcast by commenting below this video player.
Have a great Thanksgiving holiday. We'll see you back here in early December.